Just how confident are you feeling about the state of the global economy right now? Most of us are feeling a little bit edgy, a little bit nervous, and just a little bit itchy and scratchy about the state of the world economy. According to the quarterly Young Presidents Organization survey of 24,000 chief executives based in 130 countries, there is, though, a marginal increase in economic confidence. And you would think that they would know, being at the cutting edge of business and industry. After a year of US declining confidence, there was a tiny jump, but a jump nevertheless. 0.5 of a point in economic confidence amongst American chief executives, but little joy from commodity producing countries like our own. This is the Moneymakers. I'm Bruce Whitfield, and tonight we look at how commodity producing countries like South Africa are faring in the confidence stakes. Joining me from our Cape Town studios, Simon Koch, who is the founding partner of Sovereignty Capital, and Chris Rolfe, who is director at Christopher Rolfe Advisory. They are both members of YPO. Simon Koch, let's start with you. Americans are feeling more confident despite Donald Trump. How are YPO members, your mates within the organization, feeling about the stakes in South Africa?
I think they're not as confident as the Americans, and certainly not as confident as they were at the beginning of last year, but slightly more confident than they were in December.
Chris Rolfe, I mean, in your daily business, you used to manage Virgin Active. That was one of your previous jobs. We've seen the likes of Brait, for example, go and buy the global business of Virgin Active. South African businesses very active outside of the country. For those of you operating inside, just are you feeling like the lager is closing around you?
There's some reason for optimism. There's a slight rebound in commodity pricing. We're seeing the dollar kind of consistent against emerging market currencies. We're seeing oil above $30 per barrel. So there's some reason to be optimistic, but I think some of the political challenges we had in Q4 last year have left a concern in a lot of CEOs' minds about, what's coming next. So it's kind of a mixed bag. There's reason to be somewhat optimistic, but there's also reason to be cautious, and I think that's playing out in the numbers.
I mean, are there particular sectors that are more confident than others? I mean, you're a strategic advisor to chief executives. We might expect that there would be a little bit of bounce in the confidence of resources-based executives. Those in the manufacturing sector, are they believing the PMI numbers, which suggest that there is a bit of a revival in manufacturing, for example?
Simon and I were just talking about that before we came on air, and it's surprising that some of the manufacturing export companies aren't taking more advantage of the lower sort of price points they can achieve given the currency. Yes, there are some labor issues and there are some high input costs given that same exchange rate, but we would have anticipated a bigger uptick in the kind of results on the export side from the manufacturing sector.
I mean, when we look at you, Simon, and I mean, you're involved with QuickFit, the South African economy does, despite itself, seem to be turning over. And I look at the growth rate. I mean, I was in Braamfontein the other day, standing on a rooftop, just looking at the huge volumes of traffic, people going about their daily business. And almost anecdotally, we're in better shape than the data suggests. Would you suggest that might be accurate? Those in work, those who are going about the daily process of growing their businesses, are actually doing okay?
I think you're right, and I think the big thing is there's a restructure going into certainly the South African economy from being 20, 30 years ago heavily dependent on resources, very little tourism. You're starting to see a change in the service industries in South Africa, and I wouldn't be surprised that service and tourism and those factors have become a much bigger share of the economy. And those, obviously, with the weak rand, are better off. Again, and you can see it in Cape Town.
Most certainly. I mean, where you guys are in Cape Town, it's hard to find a space on a pavement anywhere. The restaurants are booming, the tourism sector in that city. But Cape Town, believe it or not, I know you guys might find it hard to believe, being Cape Townians, is not an independent country. It's part of the broader whole, of course. So business confidence in Cape Town, I guess, for people in the service industries is rising, but it doesn't seem to be filtering through into much of the rest of the country. There's a lot of pressure being brought to bear. We're seeing it in the jobs numbers which have come out recently, the unemployment rate up to 26.7%. There are large parts of this economy, Simon, which are struggling.
I agree with you, and certainly your agriculture with the drought and your commodity, which is a double, and the commodities, other than you look at the platinum industry has been decimated in the last couple of years with the platinum price way below its standard gold price. And those are big factors in the South African economy. So it's actually held up surprisingly well. If you look at what has happened on the global, into our two major areas of industry and employment.
Chris Rolfe, for a long time, business has been able to ignore politics, and politics and business has sort of coexisted a little bit like the family cat and the Jack Russell Terrier in the same house. They'll hiss and bark at each other, but not cross each other's path too much. That changed quite fundamentally in December with the sacking of Nhlanhla Nene, and we've seen recently the 100 billion rand cost to the PIC in terms of the impact it had on members' pension funds. Suddenly, we're seeing that collision course between ideologies come to the fore. Is that empowering or disempowering in your world?
Unfortunately, disempowering, where you see government, labour and business at loggerheads. That really talks to the confidence that some of the CEOs are feeling or not feeling, as the case may be. When you make fixed investment, when you hire people in a particularly rigid labour market like we have, you really do that when you're on the front foot and you're feeling positive. So whilst in the survey we see that 61% of CEOs forecast an increase in sales, 47% see a stable environment in terms of fixed investment, and 53% see a stable environment in terms of headcount. So that's not really suggesting that people are feeling really confident. And I think one of those points that you highlight is that collision where labour, capital and government are kind of at loggerheads, and that doesn't support a very confident picture for chief executives. When
you go to your top secret YPO meetings, though, what are your colleagues making of the meetings that are happening? And there are talk shops between business, labour and government, orchestrated by Pravin Gordhan and Jabu Mabuza, pre-Davos, post-Davos, and then again recently we've seen another meeting in Pretoria involving the president of the country, and everybody's saying terribly nice things about each other, but not necessarily putting anything into action.
I think what everybody wants to see is just transparency. We want to see clear, open dialogue. We want to see common objectives. We want to see common goals, from education to R&D to fixed investment. We want to be a country that is focused on the positives, and that comes from these dialogues, and hopefully will, in the near future, translate into reason to invest. Unless they find the reason to invest, chief executives and CFOs like to sit on cash and leave it in their money market accounts. So I think the net result is the way the global survey predicts sales, fixed investment and headcount. Those are three wonderful indicators as to how confident chief executives are feeling. And at the moment, as you pointed, South Africa is 0.1% up on last quarter, which at least is a positive. It's a stable position, but it's not the 3 or 4 or 5 points that we'd like to see in the next quarter coming forward.
Simon, Koch, what is it going to take for you to unleash, no doubt, the vast amounts of capital that you're hoarding right now, if not you? What's it going to take for the South African, the corporate sector, and for venture capitalists to start putting some investment in?
Chris mentioned the political issue, and I think the political issue is also there's a certain I hiatus, because the ANC goes and votes for their president in 2017, which is 18 months' time. There's no clear successor, or if there is, no one knows about it. There's nothing. So we're sitting in a sort of transitionary phase, similar maybe to what you could call the American election phase for the next, who's going to rule us and who's going to be in charge for the next 10 years. So until that is clear, I think you're going to find a cautious approach.
But isn't uncertainty the name of the game, and it's about risk taking? If you look at the time that Brian Joffe started Bidvest, 1987, it was post the Rubicon. Adrian Gore started Discovery at the time of the transition to democracy, when people were bailing on the country. It's about looking to a future that is visible, I suppose, and maybe that is the problem, Simon.
Yes, it is. It's about, those are the businesses, and I think at the moment people are still trying to work out what happened in December and what the effect is going to be. And I think it's been cautious. They haven't all panicked. They've basically said, look, we're stable. Let's see where we go. I would expect in the next couple of months to see, depending on what the World Bank and the credit agencies say about our debt and our credit rating, I would expect to see a bit of cautious optimism.
I mean, Chris Rolfe, what is your sense of it? You talk to chief executives all the time. You've got a number of them on speed dial. They give you a call to say, look, come and give us a hand with our structuring. Come and give us a hand with our strategy. Who is the most, or what sectors perhaps are the most confident in South Africa right now? Who can we learn from?
So we're seeing positive things coming out of the service sector. I think by nature, the service sector, from hospitality through to call centers, is a slightly more sophisticated sector than some of the other commodities or agri-based sectors. So we're seeing some positive investment happening in that space. Some of the service sectors are able to export product and export services relatively easily. So that's, again, kind of navigating some of the complexities of government and some of the complexities of exchange rates. Again, I pointed to that agricultural sector earlier. One hopes that they've got beyond the worst of the drought, that we're going to see some better environments and some better export numbers from those sectors. But there's not a lot of cheer. I mean, I think the reality is we'd like to see more positive sectors showing some good numbers, but there's a cautious approach and there's some average returns and there's still a lot of cash that people are sitting on waiting to deploy it. So it's not all rosy, but it's certainly not doom and gloom. And I think the global pulse has shown we're stabilizing. And I think that's certainly a far cry from where we were in Q3 and Q4 last year when we thought the bottom had fallen out.
I was chatting the other day to Paddy Lehotla, who is the statistician general, and he's talking about this demographic crisis that we have in South Africa, not his words, mine, in terms of just the vast numbers of 15 to 34-year-olds who currently are unemployed, and many of whom are unemployable, and in their lifetimes are unlikely to get any kind of work. Any prospects that we're going to be able to grow South African employment in the short to medium term? Chris?
Education. I would like to see a loosening of the labour laws in terms of the ability to hire and fire people with more flexibility. The National Development Plan, there are some things that could help us try and grow the employment base and try and erode that very, very big number that we sit on. But it's not easy pickings. I mean, I think as a country we've had significant challenges over the last 22 years. But we're certainly not out of the woods, and I hope that we can collectively come together as government and as business to try and solve some of those problems, because we know the social consequences of having unemployed 20 and 30-somethings is not particularly good for social stability, and it's not good for kind of country development. So we really hope that we can tackle some of these as a country and move forward. In the same breath, I'm going to say that it's not just up to political leadership, it's up to business leadership as well. We need to see a kind of pulling together of all parties.
There we go. Chris Rolfe, thank you very much. My thanks to YPO members Simon Koch, founding partner of Sovereignty Capital, and Chris Rolfe, director at Christopher Rolfe Advisory. More issues to talk about next time on the Moneymakers. I thank you for watching this evening, and my thanks to my guests for joining us from Cape Town tonight. I'm Bruce Whitfield. Thank you for watching. Good night.